Welcome back to the deep dive. Today we need to talk about well, a financial paradox,
A
real.
paradox. I like that.
Yeah, because I've been staring at two different screens all morning, and they're basically telling me two completely different stories about the exact same company.
Oh, it's one of those days in the market where the math just doesn't seem to math, right?
Exactly. The math is not mathing. We are looking at Booking Holdings today. You know the drill. Booking.com, Priceline, Kayak, OpenTable, the absolute giant of the travel
Yeah,
industry.
yeah.
And they released their Q4 2025 earnings report yesterday. This is February 18th, 2026. And if you just look at the raw numbers on screen one, they crushed it.
Yeah, crushed it. It is, honestly, putting it mildly. I mean, they beat revenue estimates by $230 million, and they
Wow.
beat earnings per share predictions by nearly $1.
Right, a massive beat. So screen one says record-breaking performance, but then I look at screen two, which is the actual stock market reaction,
Yeah.
and it is a complete bloodbath.
Yeah, it dropped hard.
The stock tumbled over 6% in extended trading. We're seeing all these headlines this morning like stock hits 52-week low and travel demand shows signs of cooling.
Which is jarring when you just looked at a massive earnings beat.
Exactly.
Hmm.
So my mission for today, and yes, I am dragging you along for this, is to figure out why Wall Street is throwing a tantrum when the company is literally printing money. We're going to unpack the Q4 call with CEO Glenn Fogel and CFO Gibut Steenbergen.
And it's a great mission because it's a classic case of the headlines versus the fundamentals. But I'd actually argue this earnings call was way more important than just figuring out the short-term stock price.
Really? How so?
Well, it gave us a blueprint for where the entire internet is going.
Okay, that is a massive claim to make right at the top of the show.
I know, but I stand by it. We aren't just talking about booking hotel rooms here.
Right.
We're talking about agentic AI finally showing up on an actual profit and loss statement.
Right.
We're talking about a massive structural change to the stock itself. And we're talking about how a legacy tech company is building a moat against the new big tech AI overlords.
Okay, color me intrigued. Let's start with the cash, though, because the scale here is actually kind of hard to wrap your head around if you aren't looking at the sheets. I mentioned they crushed earnings, but put that in context for us. Like, how big is big?
It's staggering. Let's look at the good column first. Just for the fourth quarter of 2025 alone, revenue was $6.35 billion.
It's incredible.
That is up 16% year over year.
And 16% growth for a company that's been around since, what, the dot-com boom? That's highly unusual. Usually by this stage of a company's life, you're thrilled with 4 or 5%. You're supposed to be a utility company of that size, not a growth stock.
Precisely. They are completely defying the law of large numbers. And if you look at the full year of 2025, their adjusted EBITDA, which is basically their operational cash flow before the accountants get too creative, hit over $9.9 billion.
So basically 10 billion.
Right. Up 20%. They are knocking on the door of a $10 billion profit year. Just to visualize that for you and the listener, $10 billion in EBITDA is roughly the GDP of a small nation.
That is wild.
And in terms of pure volume, they sold 285 million room nights just in Q4. For the full year, they moved over 1.2 billion room nights.
1.2 billion nights where someone slept in a bed that Booking sold them. That is a lot of pillow mints.
It really is. A whole lot of little soaps.
So here is where I get stuck. The business is printing money. People are clearly traveling like crazy because the volume is up. Why the long face from the market? Why did the stock drop 6%? Is there some hidden skeleton in the closet we aren't seeing?
There isn't a skeleton, but there are a couple of yellow flags that really spook the algorithms. You have to remember, Wall Street doesn't care what you did yesterday.
Right, it's all about tomorrow.
Exactly. They only care about tomorrow. And they saw two things in this report that they didn't like. First, there was this phrase the executives used, marketing spend deleverage.
Okay, marketing spend deleverage. That sounds like absolute corporate speak for our ads got way more expensive.
That is exactly what it means.
Yeah.
Essentially, they spent more money on marketing to acquire those customers than they did previously.
Got it.
The efficiency of their ad spend dipped slightly because in the travel game, you are constantly fighting Google for eyeballs.
Right, you're buying keywords.
Exactly. And if it costs you $50 to get a customer instead of $45, the market gets nervous that your growth is becoming unsustainable.
It implies that the easy growth is gone, and now they have to fight harder and pay more for every single booking.
Exactly. And the second thing was a comment from the CFO, Ewout Steenbergen. He mentioned that in the U.S., they saw slightly lower average daily rates, or ADRs.
So hotel prices actually dipped a bit in the U.S.
Just a bit, yeah. And they also noted a slightly shorter length of stay.
Ah, I see. And let me guess. The market hears prices down, trips shorter, and immediately screams, recession.
You nailed it. The narrative shifted instantly to the consumer is tapped out, travel demand is cooling. Even though they sold 9% more room nights, the actual value per night dipped slightly, and investors just panicked.
They're worried that 2026 is going to be the year the post-pandemic travel boom finally busts.
Right. It's amazing how sensitive these financial models are. A slight dip in room rates equals total panic on the trading floor.
But clearly, the company itself doesn't seem to be panicking at all, because right in the middle of this bad market reaction, they dropped some massive news that feels like a total flex to me.
Oh, it was absolutely a flex. They announced a 25-for-1 stock split taking effect in April 2026.
Whoa, 25 for one.
Hmm.
Now, I want to pause on this for a second, because technically a stock split doesn't change the underlying value of the company, right?
Not at all.
It's like cutting a pizza into 25 slices instead of one giant slice. You still have the exact same amount of pizza. So why do it? Why does it actually matter?
It comes down to psychology and accessibility. Booking Holdings was trading at around $4,000 a share.
Which means if you're a normal retail investor, like if you're just a regular person listening to this with a Robinhood account, you probably can't even buy a single share. It's just too expensive.
Exactly. It keeps the little guy out. It makes the stock feel heavy and exclusive. By splitting it 25-for-1, they bring the price down to maybe the $160 or $170 range.
Much more manageable.
Suddenly, it's accessible to everyone. It increases liquidity. But way more than that, it's a massive confidence signal. You don't split a stock if you think the price is going to crash to zero.
Right. It's them saying, we want everyone to own a piece of this, and we expect it to keep going up.
And they didn't stop there with the flex. They also raised their dividend by nearly 10%.
Nice.
Up to $10.50 a share. Well, free split share anyway. And they bought back $5.9 billion of their own stock in 2025.
$5.9 billion in buybacks. That is literally the company looking at the market and saying, oh, you think a stock is worth less today? Fine. We'll just buy it all ourselves then.
Precisely. It is a signal of extreme confidence from management. They're basically saying, look, we have a cash-generating machine here, and we aren't afraid to use it.
Okay, so that is the financial roller coaster side of things. You have the panic on one side from Wall Street and the corporate swagger on the other side from the board. But I really want to pivot to the strategy now, because this is where the deep dive gets really interesting.
Let's do it.
There was a phrase that kept coming up in the transcript, and honestly, it usually makes my eyes glaze over when I read this stuff. The connected trip.
Yes, it is Glenn Fogle's absolute favorite phrase.
It really is. And to me, it always just sounded like marketing fluff.
The
Connected trip. It sounds like a bad slogan for a smart luggage company or something.
It really does.
But looking at the data in this Q4 report, it seems like they are actually pulling it off. What is it, really?
I agree, it sounds like complete fluff. But if you look at the mechanics of it, it's a very tangible strategy to solve that exact marketing deleverage problem we just talked about.
Okay, how so?
Historically, Booking was just a hotel site. You booked your flight on Delta.com, you booked your rental car on Hertz.com, and you used Booking just for the room. They were completely disconnected.
Right.
The connected trip is their attempt to be the one-stop shop for everything. And the gateway drug for this strategy, interestingly enough, is flights.
But wait, selling airline tickets is a notoriously terrible business.
It is.
The margins are razor thin. Airlines absolutely hate paying commissions to third parties. Why would Booking want to get into the flight business?
Because of the data and the stickiness.
The snickiness.
Yeah. If I can get you to book the flight with me, I know exactly when you are arriving. I can suggest the ride from the airport. I can suggest the hotel, the dinner reservations. And the Q4 numbers prove it's working. Flight tickets booked grew 37% year over year.
37% growth. That is wild for an airline ticketing business in a mature market.
They sold 68 million airline tickets. And attractions tickets, so museum passes, tours, that sort of thing, grew nearly 80%.
So they are capturing the entire itinerary now.
Exactly. And here is the key metric that ties it back to the marketing problem. Travelers who book a flight and a hotel are what they call stickier. They come back to the Booking app more often.
Because it's easier.
Right. They are way less likely to go to Google and search for a competitor next time because they already have everything in one place.
It's the Costco effect. Once you're inside the store, you might as well buy your tires and your groceries there too.
Exactly.
And I assume this ties into their loyalty program, Genius, because they talked a lot about that too.
It does perfectly, and Genius is becoming a serious moat for them. Now, be honest. How many loyalty programs are you currently in where the points are basically worthless?
Literally all of them. I have 50,000 points with a pharmacy chain right now, and I think I can get like a free candy bar,
Yeah.
maybe a toothbrush if I save up for another year. It's a joke.
That is the industry standard, right? But Booking went a completely different way. Genius isn't about hoarding points for 10 years to get a free flight. It's about immediate, tangible value.
How does it work?
If you are a level 2 or level 3 Genius, which really just means you travel a few times a year, it's not hard to hit. You get 10% or 15% off the room immediately. You get free breakfast. You get room upgrades.
It feels like real money in your pocket today, not vague points for tomorrow.
And the data shows it's working brilliantly. Level 2 and Level 3 Genius travelers, these are the
Right.
frequent flyers, the core customers, now account for over 50% of all their room nights.
Over half.
Over half. And the absolute kicker here is these people book directly. They just open the app on their phone and book.
Oh, I see.
That means Booking doesn't have to pay Google for the ad click. That saves them an absolute fortune in marketing money, which circles right back to why they can afford those massive buybacks.
Wow. So the Connected Trip isn't just a slogan at all. It's a retention strategy. It's a way to lock people in so they don't have to keep buying those same customers back from Google every time they want to take a summer vacation.
Exactly. It's a defensive wall against search engines.
Speaking of defensive walls, let's pivot to the other big buzzword. And this one is pretty much inescapable in 2026, artificial intelligence.
Of course.
But I noticed a real shift in the language in this report. They aren't just saying Gen AI anymore. They're using this specific term, agentic AI.
Yes. Agentic.
It sounds like something straight out of a spy movie, like initiate the agentic protocol. What does it actually mean in this specific business context?
So for the last few years, we've had generative AI chatbots that can write a poem, summarize a text, maybe give you a nice list of 10 hotels in Paris if you ask nicely.
Right, mostly text generation.
Exactly. But agentic AI implies agency. It means that AI doesn't just talk to you. It does things. It takes action in the real world.
Yeah.
It plans, it books, it manages changes autonomously.
So instead of just asking the bot, hey, what's a good hotel in Paris, the AI actually goes and secures the reservation for you.
Right. It logs in, it selects the dates, it inputs the payment details, it confirms the booking. But what I found most fascinating in this Q4 report wasn't the futuristic promise of what it might do one day. It was the financial proof today. We finally have a receipt for all this AI investment.
A receipt. You mean it's actually showing up positively in the profit and loss statement?
It is. Usually AI is just a giant cost center for these companies. You spend billions on chips and server farms and just hope it pays off later.
Yeah, totally.
But the CFO pointed out a very rare stat. Customer service cost per booking dropped about 10%.
Wait, let me make sure I have this math right. Bookings went up 9%, but the cost to service those same bookings went down.
Exactly. Bookings went up, but the cost to service them went down. That is the holy grail of corporate scaling.
How is that even possible? Usually, if you have more customers, you need more people in call centers to answer the phones when flights go canceled or things go wrong.
Not anymore. The AI agents are handling the inquiries now. They are changing dates, they're answering questions about pool hours, confirming payments, handling routine cancellations, and they're doing all of it without a human ever having to pick up the phone.
That is huge. I mean, we always talk about AI efficiency conceptually, but seeing a double-digit drop in actual service costs is real money.
It saves them hundreds of millions of dollars, and more importantly, it allows them to scale without bloat. Usually, if you grow your bookings by 20%, you have to hire 20% more support staff. Booking has officially broken that correlation.
So AI is making them leaner and much more profitable. But here's the question I always have, and it's the core bearish argument against companies like this, right?
Let's hear it.
If AI is so good, why do we even need Booking.com?
The existential threat.
Yeah. Why can't I just go to ChatGPT or Google's Gemini or whatever the big dominant model of 2026 is and just say, hey, book me a trip to Tokyo? Why does Booking survive in a world of incredibly powerful language models? If the AI is smart enough to plan the trip, Why do I need the middleman taking a cut?
This is the elephant in the room. This is exactly why some analysts think the stock is doomed long term. But CEO Glenn Fogel had a very strong rebuttal to this on call, and it centers on a concept called the merchant of record.
Merchant of record. Wow, that sounds very boring and incredibly technical.
It is deeply boring and highly technical, and that is exactly why it's their best defense against big tech.
Okay, unpack that for us. Why does being the merchant of record save them from being eaten by Google or OpenAI?
Fogel's core argument is that searching for travel is easy. AI can search beautifully. It can find you the perfect boutique hotel in Rome.
Sure.
But transacting travel, actually moving the money across international borders and legally securing the room, is incredibly hard.
Because you have to deal directly with the hotels.
You have to deal with the money, first and foremost. Booking handles over 100 different payment methods and 50 different currencies.
I didn't even know there were 100 payment methods.
Exactly. Do you want to pay with Alipay? With a local credit card issued in Brazil? With crypto? Booking handles all the conversion and fraud detection.
That sounds like a headache.
It is. And then think about the supply side. Booking lists over 4 million properties. Many of these aren't a Marriott or a Hilton with a massive IT department.
Right.
They are small bed and breakfasts in rural Italy or a vacation rental in Bali managed by a local family.
Right, they might not even have a computer at the front desk. They're tracking reservations on a notepad.
They definitely don't have a real-time API that OpenAI can just easily plug into to book a room. Booking.com does the dirty work of connectivity. They handle the customer service when the hotel owner doesn't speak your language. A generic AI model from a big tech company does not want to deal with that mess.
I see. So the AI might be able to find you the hotel, but it can't guarantee the transaction or provide the customer service if you show up and your room doesn't exist.
Exactly. And then there is the regulation. Fogel specifically called out the alphabet soup of European regulations. You've got the DSA, the DMA, DAC7.
Sounds like an absolute compliance nightmare.
It is a regulatory nightmare. Becoming the merchant of record, which means you are the entity legally responsible for the transaction, requires navigating all of those tax laws and data privacy rules globally.
Oh, I get it now.
Fogel's bet is that the big AI companies want to be high-margin, clean software businesses. They do not want to be low-margin, operationally heavy travel agents dealing with tax remittance laws in 200 different countries.
That makes a ton of sense. It's basically a protective wall of complexity. The sheer messiness of the real world protects Booking from the mathematical purity of the AI world.
That is a great way to put it. The connected trip plus that merchant of record status creates a moat that is very, very hard to cross, even for a trillion-dollar tech giant.
So looking ahead to the rest of 2026, they've got the cash, they've got the AI efficiency lowering their costs. What are they actually spending their money on? Because you mentioned they aren't just hoarding it, aside from the buybacks.
No, they are reinvesting heavily into the business. The plan they laid out is to spend $700 million above their baseline investments in 2026.
$700 million extra, just in 1 year. Where is that going?
A few key strategic areas. They are doubling down on growth in Asia and the U.S. markets. They are expanding OpenTable internationally, tying dining into the connected trip, and they are investing heavily in fintech, which bolsters that merchant of record payments platform we just talked about.
And what about the Airbnb competition? I feel like we can't talk about modern travel without mentioning alternative accommodations. Is Booking actually competing there, or is that just Airbnb's world and Booking is just hotels?
Oh, it is a key battleground for them. Booking now has 8.6 million alternative listings.
Wow.
That's homes, apartments, unique stays, cabins.
8.6 million is incredibly significant. That's on par with the biggest players.
It is. And an interesting note from the call, that specific segment is growing faster in the U.S. than their traditional hotel business. So they are actively taking market share there.
So they are effectively building an Airbnb competitor right inside of Booking.com.
They are. And they are funding all of this aggressive investment through what they call their transformation program.
Let me guess. Transformation program sounds like corporate speak for firing people and cutting costs.
It effectively is a massive efficiency drive, yes.
Yeah.
They saved $550 million in run rate savings in 2025.
That's massive.
And they're aiming for another $500 to $550 million in 2026.
Wow. So they are cutting $500 million in costs, probably largely through that AI efficiency we talked about with customer service, and they're taking that exact money and shoving it right back into growth initiative.
Exactly. It's a textbook strategy of becoming leaner operationally so they can be way more aggressive strategically.
So let's bring this all back to the listener. If you're looking at your portfolio today or just trying to understand the travel market, we started with a paradox. Great earnings, dropping stock. We've unpacked a connected trip, the agentic AI, and the regulatory moat. If you had to sum up the state of booking holdings in early 2026, how would you put it?
I would say the market is currently reacting to short-term fears about marketing costs and a potential slight consumer recession. But underneath that, the company is successful at transitioning from being just a hotel site to a full-blown high-tech travel agent.
A high-tech travel agent.
Right. They're proving that while AI makes searching for a trip easy, actually servicing and transacting that travel is still a highly complex, human-centric business that requires a massive, regulated operational machine.
It's the difference between having information and actually executing on it.
Precisely. And for the listener, I think that is the key takeaway. In the age of AI, the value of a business shifts from simply finding the answer to reliably delivering the result. Booking delivers the result.
That is a really fascinating perspective. It genuinely changes how you look at the app on your phone. It's not just a digital list of hotels anymore. It's a massive logistical engine protecting you from the absolute chaos of international commerce.
It really is. They hide the complexity, so you just see a simple book button.
I want to leave everyone with a final thought to mull over, kind of building on everything we just discussed. We talked about agentic AI, reducing the cost of service, and the connected trip, consolidating all our preferences and data.
Yeah.
If Booking gets its way, and this technology works exactly as advertised over the next few years, are we moving toward a future where we never actually plan a trip again?
What do you mean by never plan?
I mean, think about it. Planning a trip right now is stressful. You have 50 tabs open on your browser. You're comparing flight prices on Tuesdays versus Wednesdays. You're reading hotel reviews. Imagine a world where you don't search at all. You just open the app and say to the algorithm, I have $3,000. I have the first week of October off work. I want to go somewhere warm, but not humid. Surprise me.
Ah, the ultimate surprise me button.
Right. And because the app knows your history, it knows your dietary preferences, it knows your budget, and it has the payment rails built in, it just books it. Flight, hotel, rental car, dinner reservation, done in 2 seconds.
That is the ultimate realization of the connected trip.
It sounds incredibly convenient, but also kind of terrifying to relinquish that much control. Would you trust an algorithm with your entire vacation?
I think if they are the merchant of record and they guarantee to fix it if it goes wrong, yes. I think a lot of people would pay handsomely for that kind of freedom from decision fatigue.
I think so too.
Yeah.
We might end up trading the joy of discovery for the luxury of laziness. But honestly, if it saves me having 50 tabs open, I might just sign up.
I'd sign up today, no question.
Well, that's a wrap on our deep dive into Booking Holdings Q4 2025 report. We covered a paradox of profit, a massive stock split, and the dawn of the true AI travel agent. Thanks for listening, and we'll catch you on the next one.
Thanks, everyone.